morning, folks. This is Anne Marie. Today is Wednesday, September the 4th, and this is the SPY report, taking a look at things. Notice several days ago, SPY filled this gap, started creeping up, came back to test it, made a little bit of a higher low. Yesterday, we had a huge gap up that faded. It's funny to hear people talk about these things. They will say, oh, and the markets were up, when really, indeed, they faded most of the day. But what did we do? We faded, almost completely filled the gap, which is what we were about, the business of completing this gap, and we pulled up as soon as we did that. So now what are we looking at? We're looking at essentially a chart that is still negative, lots of negative moving averages following here. We have, when we gapped up into this gap here. So now what we have to do is see if we can get up and over this congestion event. That's 165. That's going to be kind of critical for us. We get up over 165, we'll be able to fill the gap, move to the north. If it holds in here, it's going to come up to test that 200 and get into this formation right here. Notice the similarities of these formations as they build. Charts still generally choppy. As long as we are sitting tight around these moving averages, we're not going to have a ton of fun movement. And it should be pretty difficult trading once we clear them. If we don't clear them, it is going to be choppy, and we will have a tendency to reverse back and forth around them. That's just the name of the game. Again, negative divergence. So it could be that we fail. But when we have a gigantic move like that, the market's normally still the day after if there was no giant precipitous reason. It had this leg come down because of the saber-rattling chat about, invading with Syria and that sort of thing. And, we'll see. We'll see what goes on right there. But that's what we need to do. If we come back down, lose the prior day's pivot, and fall into the fill of the gap before, chances are we will test that lower low. This region right here, which has been S1 of the weekly pivot, has been pretty important so far. Let's take a look at the IWM. We've got that in a 2-hour track, so let's change that to 1 hour. This again, gap fill. Now it only did that yesterday, right? It had not completely filled that gap until yesterday. Gapped well down, holding underneath the pivot, right? So this looks a little weaker. Now if the TF telegraphs the movement of the ES, this is suggesting that we have more downside momentum. All right, and so let's watch what happens here for this movement. If we lose the low, that's 100, we should drift into the baseline and coverage of the next gap, because we have gap after gap after gap after gap that we are trying to fill in. That comes into 99.69. It might be a quiet day. That brings us to the 50% retracement. Remember, we're thinking that 61.8 is going to be that number, which happens to be at the next relative gap, though that one has been filled. All right, negative moving averages, things trending downward. We've got to clear the pivots, this daily pivot, and then we got to get above these moving averages. So that means 2 pivots we have to cross. This is a tough space. Very, very tough space for this chart to get through. If it does, it's going to be really nice. Probably we're going to chop around and these things are going to get a little bit closer together. That's my thought. The 200 and the 50 are getting tighter together. except for yesterday where they began to expand again. But if this pops up, that'll flatten out a bit. This relatively flat motion is going to give us choppy markets. We must trade level to level and be content with small wins, or we stage something that says, hey, listen, I believe this thing is eventually going to get to here. I'm taking the short, and that's it. Right? So, shorts did trigger here in this chart, but the gigantic pop to the afternoon put them a little bit at risk. So now our question is, can we get up and over the breach of these regions right here? That's 101.37. If we do, we're in great shape for upside momentum. Else, we're going to come down into that 100 and lose it. Beginning to sound a little bit like a broken record in here. All right, still tight, squeezing. It's gonna be big. We still have these edges to get up and out over. They keep expanding, which is a little bit annoying, but I'm guessing above that 76, 74-ish area is going to be the major breakout event. Right now, we've got a super, super tight. Let's add the ergodic in here. Yeah, this isn't telling us anything except that, we have generally negative momentum, but the moving averages sitting tightly like that, we just have to wait until they break and confirm the clearing. So far, no confirmation out of the clearing on the hourly chart. Once that happens, it's going to be really pretty. You've got to keep your eyeballs on that. That is a break that is going to be very important. Very, very important. Overall, extremely messy to deal with if you're dealing in this little space. The one thing the Qs did not do, it really didn't come in to fill the gap, and it hovered there. A lot of the other charts really did dip down and stay there for a while. These guys, they really didn't. You can see that again. Could we have faded that and taken it short to fill the gap? Absolutely. But after that, playing in this area, always a little bit tough. Always a little bit tough. We do see the expansion of the 50, getting away from that 200, so that did bring it down just a bit. However, we are still caught in that zone. We'll wait for it to clear, and then we'll be home free. Check the blog for precise trading levels today. So far, things look like we may drift a little bit lower. Charts pre-market are doing that just a little bit, but we'll just have to see. All right, this one is the no-fly zone unless it's out on the edges, right? Don't diddle in the middle, as they say. Good luck trading today.